Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So I'm going to go over two quick patterns today. I'm going to go over the red to green kind of red dog reversal trade that you play for a cash flow bounce when you're in some kind of tactical mode where things are pulling back, where you sold some strength maybe a few days before and you're looking to play a bounce. But then also once you get that bounce, how do you short a rally, okay, and then perhaps even add once it breaks the prior day low for more downside follow-through. So short a bounce versus resistance, okay, so you get a good average cost, and then if you get momentum to the downside, you add to it and you get paid twice. So, let's just go through a few examples. First things first, let's go to just where the S&P cash closed. All in all, still, hanging around here. Actually, is this a little bit below this trend line from the breakout post the first jobs report. This was when basically you had your inside flag pattern after the post-Brexit bounce. And since this date, basically since almost, what is this, July 6th, we've been hovering above, most of the time above the 8-day, but after mixing the 8-day, we've held the 21-day. We basically broke the 8-day, and now I think this is a little tiny bit delayed, but we're right here. We're right at support where it's just a little questionable of what's going to happen. So if you happen to have sold, okay, just say you sold, resistance here, okay, into the double top, or you maybe sold when we traded below Tuesday's low. Maybe you tried to buy a little bit of a pivot move for a morning bounce early in the morning. So let's see what that looked like in the spiders. It wasn't really that pronounced in the spiders, but basically here's where we are now. It's not 217.40, it's like 217.70, so it's still hovering above. But go to the 5-minute candlestick here. So basically in the morning, okay, we had a little bit of a down open, okay. Here is yesterday. Where's yesterday's low? This is the old line. Okay, I'm sorry. It's been a long day. So here was yesterday's low. This was what was it? Where is yesterday's low? Oh, okay, sorry. Here. No, that's today. Or the recent low. That's the 17th. No. Let's go to the 5-minute. Okay, it's hard to see. I guess that was yesterday. So here is yesterday's. Where's today? I guess yesterday's low was on the close. So here, that's where it was, and you had a quick little move. So it's hard to tell here, except for it did reclaim that. Then you had one little move here. Okay, this was move number one, and then it consolidated into about 10:35, and then gave you a push, basically into the prior afternoon resistance. So that was your whole oversold bounce, which you can't really see the H cell setup here. You can a little bit, but it didn't really take out the lows. The H cell setup would have been okay if you had this move yesterday to the downside. Okay, that's not a good example. Anyway, let's go to the IBBs. IBB. Okay, this you could see it a little bit better. Here was yesterday's break. Okay, of when it went red. So this would have been, the pole of the H. Okay, and then yesterday, or in my morning note, I talked about, if this has power, meaning if it, can't retrace the majority of it. So let me show you more on the daily chart. Here's the daily chart. Okay, so this is your engulfing bar right here. Okay, an engulfing bar means power, an engulfing bar means control, and there is your engulfing bar from, what's it called, yesterday. Okay, but from 299 down to 285, perhaps here's your pivot. Perhaps it needs to work off this move somewhat. So in my morning note, I said if the bears want to keep control, they probably don't let it get too much above 288, maybe up to 291. Also in the morning call. So now you go back to the 5-minute chart to see how those lines work out. So basically, in this move, here is what looks like the first move, okay, which is a big move down, right? And that could be the start of the H. Here was resistance, right? This is where it accelerated into the close. So what some people would do is draw an H where, big move, have to work it off a little bit, starts to create the symbol of a lowercase h. Okay, here it starts to break the morning trend, just say from the lows. So yeah, this actually works out pretty good. So basically on this, you could have said, okay, I'm going to short now 287. It just spent a good 3 hours working off a 10-point move. I'm going to short here versus the level it broke down in the afternoon, so around 287, versus the morning high. And then it started to roll over. So short number one, and then if you were looking to do it, here is yesterday's low. So once you break a prior low, you can get momentum to the downside. So short one, short two, and then obviously it bounced into the close, but you had two good trades. One, somebody might have been trying to play a little long verse after the oversold bounce, and then here's your H rollover. So, so all in all, you can take a closer look at it. Everyone's like, what's the H sell setup? The H sell setup is basically you have a strong move to the downside like this, boom. The next day you get a little bit of a bounce back, trying to figure out how weak it really was. Stays in the bottom third because that's where it was. Starts to roll over. Once you break the morning trend, you short a little here versus a level, so that's calculated. Then you could add once it breaks the lows, and you get double paid. So that's an example of the H sell setup in the IBBs. Now let's talk about the Red Dog reversal. Yesterday, a lot of people got their butts kicked in the metals and the minors because lost the 8-day, lost the 21, lost the 50-day. So today, people are looking for some type of bounce. How do you play a bounce? You do it in a calculated fashion. So you go to the GDX and basically, here it opened lower. Okay, first of all, here's your trend line. So this is where it broke, the intermediate trend line at the 50-day. Here's where it broke, the 8 and 21 days. So most momentum traders probably got out of the way here. So if you got out of the way at the this engulfing bar up here, or when it broke the 8 and 21 day, which is the momentum trend, you weren't involved for the noise. But then today it opened up lower. Okay, in my morning note, I'm like, the only thing is yesterday's low, 26.84. Okay, besides support going sideways. So if you're not involved and you're trying to play an oversold bounce in the morning, okay, here is the low it needs to reclaim, then some shorts cover, and you get a bit of a move. Not a blockbuster trade, not a home run, but just something to do, in a situation that's trying to figure out its identity, where it lost momentum, lost the intermediate trend, and it's still above the 200-day. Go to the 5 minutes so you can see how fast sometimes it happens. And this one happened fast. All right, so this one opened below it, okay, traded down through it. So people are like, oh my God, the miners are going down again. Let me get out of the way, or let me get short, and then boom. So this is your buy at the prior low, and then basically, you got paid. Okay, it was a quick trade, and then what a quinky dink! It came into the prior breakdown area from the prior afternoon, which was about 50% of that move. So then it rolled over, and some guys might have even, look at that, shorted here. You had a little bit of a head and shoulders pattern on a 5-minute. Left shoulder, head, right shoulder, broke this, gave you a move down, and this is also a little bit of an H. So first thing is the Red Dog reversal, play a bounce considering the size of the move that it's had, then figure out if you want to short the bounce versus just play it, see where maybe it goes into, then starts to roll down. But as you can see here, it didn't come down and break the lows. So you had to figure out what you wanted to do there. But either way, that's your Red Dog reversal. You buy here, you put a stop there, and boom, you had a nice percentage move, and then you could have trailed a little bit when it broke this intraday pattern. You could get out of the way. So again, a way to play it from the bounce side, calculated, and then a way to maybe short into resistance if you're looking to do that. And then real quickly, let's just talk about a few stocks. NFLX got upgraded. It was a decent trade, not a blockbuster trade. I thought it would be acting better, but anyway, a lot of us made some money off the open. It didn't close, great, but something, something that looks decent here. So I would say it broke above this, and now it's got to really hold above this to keep any kind of consistency. If it breaks this, I'm sure guys will be upset, including me. I took a little bit home overnight. Baba also, we sold yesterday, got stopped out, and even Baba gave you a decent trade, off the off of Red Dog reversal. What's a Red Dog reversal? If just say you got stopped out of Baba here when it broke this spot. Maybe you said, okay, I'm gonna do a red from green because I'm not in it. I got out of it at 95. Now it's a 93, 2 points lower. Let me try it again. It's still above the earnings gap. It's still above the 21 days. Just needs time. So in the morning, a lot of us bought the dip, okay, and then when it reclaimed 93.50, that could have been, a quick active trade for you. It wasn't a blockbuster trade, but it was decent. So this is where you got stopped out. Here was the prior day's low. This was 93.50. So it opened below it. Okay, could have continued down to 92, 91. It didn't. Wedged, and then, boom, that could have been your buy right there. And then, it basically had a decent bounce to about 94.50 before rolling down. So calculated wise, if you were trying to play it in here and got just say stopped out there or stopped out at the low here, you then had a little bit of an oversold bounce for a tactical play that could have made you some cash flow. And now it's still trying to prove that it could build an upper pattern and that some momentum could stay somewhere. And at this point, it's been a little choppy, but still kind of in the game to just rebuild. And these things take some times. It takes some time sometimes. So until it clears this spot, okay, it's still just in base building mode. Facebook did the same thing, opened lower and went green. Okay, it's still hanging in there. So that's basically it. Listen, it's Thursday. Tomorrow you have the Fed. Banks are hanging around. I think Janet's going to be hawkish. We'll see how the market responds. We've lost a little momentum, but everything's not being thrown out the window. You're getting to play things tactically as a rebuild for maybe the fall. We are below the 8 and hugging around the 21-day in the S&P cash, but just means that things have slowed down momentum-wise. You don't have to be in full cash, but you could be a little bit more selective on what you want to hold, the reason why you want to hold it, and then have enough of a game plan so you could trade 3-day down moves, play a red dog reversal for a bit of a bounce. And then if all of a sudden something got crushed and it gets an oversold bounce and you think it's going to roll down, figure out where resistance 1 and 2 is so you could short into resistance to build the H, and then maybe you get momentum and it takes out the prior day low and you get more momentum and you get a good short. So lots of tactical ways to make some money while the market's trying to figure out where we hold and what potentially the next move is, because right now, we're a little bent, but we're far from broken, and it all depends on your time frame on how you handle yourself and what you want to do. A lot of people leaving for vacation next week, so it's going to be interesting. Have a great night, and I'll be involved in the morning. No morning call by me, and my note will be a little smaller as it's usually huge Monday through Thursday. Then Friday it's a little bit smaller as it is a little bit of a dress down day. So anyway, I'll see you tomorrow. Bye-bye.